All right. Thank you to the infamous Mr. Felix Escobar. Coming in clearly. Thank you, Bill. All right. Welcome, everybody. Thanks for joining us for today's session with Dr. Menaker and Market Therapy. It's been a couple of months since we've had the blessing of having the good doctor with us. You all probably know pretty much who I am. I'm not going to waste much time. Just a senior performance coach, and very excited to have the opportunity to have the doctor back with us today. I've set up a kind of a brief intro for the doctor here. The Dr. Menaker is a licensed clinical psychologist with a PhD in psychology. He considers himself more of a stretch than a shrink. I just love that. Since 1995, he's been a performance coach for top money managers and professional traders. What makes Dr. Menaker special is he's also recognized as an experienced and successful trader himself. He's one of us. He's also a recognized expert in emotion management, intuitive development, and a whole host of other things. How are you, Doctor? It's great to have you with us today.
I'm doing great, John. Great to be back.
Do you enjoy the holidays? Things are going okay. Got nice weather out there on the West Coast.
Gorgeous. We had 70-degree days last weekend. It was really nice.
I'm really hurting for you because it's about 2 degrees here in Chicago.
Well, sorry about that.
So the doctor and I were talking, and we thought we would talk about the difference in the psychological changes that traders go through when they go from a simulated account, maybe even into the trading combine, and then off into a funded account. Doctor, do you want to take it from here and then talk about what we're looking at here, or would you like me
Sure.
to?
Well, if you want to start off, John, go ahead, and I'll pick up for sure.
Okay. So some of you that are with us today have probably seen this slide before, and it's really just about the difference between just kind of trading without risk and without accountability, without consequence. And when you start to add risk to your strategy, how it becomes increasingly difficult to maintain your ability to keep making those same trading decisions. So if you're trading on sim, I kind of liken it to basically if you're able to walk, safely without touching the floor on a 2x4 that's 20 feet long laying on the floor, it's pretty easy because there's no risk. You're not going to hurt yourself if you fall off, but maybe getting into the trading combine, that same 2x4 is now 2 feet off the floor. It's the same process. Is as easy as it is to go across that 2x4 on the floor. You should be able to do the same, but just the fact that there's the risk involved makes it more difficult. And the more risk you add getting into a funded account or trading your own money, the higher that bar gets. Now, we've got another line here that we haven't talked about yet. We'll talk about that later. But that's really kind of how I explain when people come to me and say, I did great in the practice account and I get into the trading combine and I can't seem to do anything right. Why is that? Doctor, your thoughts?
Yeah, you mentioned a lot of the big ones. There's a lot of others as well. I mean, I think sim trading, let's just look at what it is. It's simulated trading or simulated account. It's not real cash. And as you mentioned, John, with the lack of financial consequences, it really, I believe it changes how we see the market. It changes how we understand trading. It's a really, really big area. The other area, which we can explore later as well today, it's a very important concept. I've mentioned it before, and it's one that a lot of people have a hard time really accepting. They understand it intellectually, but it's a whole nother ball game to accept this concept. And the concept is this, that you can lose money by making good decisions. You can miss out as a result of making good decisions. You can make money as a result of kind of what I call low quality decisions. And because of that, because of the inability to sort of really accept that, people can easily they don't really know where they're at as a trader, unless they really can accept those things that I just mentioned. They're really, really, really big. And I think a big part of what I just mentioned too, John, another area I'll just kind of open up, we can talk about later, is this idea that trading is, it's a really interesting, curious mix of both skill and luck, right? I mean, there's skill certainly involved, a lot of skill. There's also a lot of luck, right? If you get into a trade, a planned trade, here's my level, I'm going to get long, and then it goes and to your target. Well, you might think like you're a genius, you predicted it, but as we all know, we didn't predict anything. We're certainly not a genius. We followed our plan, and then other traders lifted prices for us, and that to me is luck. So the fact that we don't internalize the fact that trading is this really interesting mix of luck and skill, I think it makes it hard for people to that's one of the big obstacles to accept that mix of luck and skill at concept, to make that leap from sim to live.
Wait, doctor, you mean I'm not a genius?
Well, it's especially pertinent, as we were mentioning before the webinar, John, especially in the market we're in right now, the current super powerful bull up market we're in. A lot of people are making money. A lot of people are feeling like a genius. I mean, I've been doing really well, and I have to keep reminding myself, wait a minute, this is not going to go on every day forever. And there's a lot of luck that I've had getting myself positioned on the right side of the market, but it doesn't mean I'm a genius. And I constantly have to remind myself of that. The minute I forget that is when I'm going to see that'll be the beginning of a drawdown. So, yeah.
I'm crushed now because I honestly thought I was a genius, but we all know that I certainly know that I'm not. I've had all of the difficulties and barriers that just about any trader can have, and the 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 thing that you mentioned about it's a lot of skill and it's also a lot of luck is something that I think we really have to work on reminding ourselves,
Mm-hmm.
especially after good periods or good periods where things are trading well. We start to kind of get this trading god complex.
Yeah, and even when our P&L is not doing well, but we're following our plan, I'm assuming we have an edge to our strategy, and if we follow that and we have a negative P&L, that's in poker there's a concept called a variance, right? It's the randomness of the cards being dealt out. So we don't really know what's going to happen. So I'll just say that, yeah, it works on both sides, upside and downside of your P&L. You got to remind yourself that there is luck involved. So on the downside of your P&L, if you're doing everything, accurately in terms of your strategy and plan, then either your strategy and plan might need an adjustment because it's not in sync with the market context. That's one possibility, but a probably more common possibility, more frequent possibility, is that we have to also remember, well, wait a minute, there was some variance here. It wasn't a lack of my skill or a lack of my psychic ability why I'm losing money, even though I'm following my strategy. It was on the wrong side of the market, and there was some bad luck involved in
that. So do we go to the Dunning-Kruger effect yet?
Sure. Yes, good place for it.
Okay. You see this line right here. There's a reason that this line is on here, and it's on the next slide, and it's something called the Dunning-Kruger effect. And you can see here there's confidence on this axis and competence on this axis. When we get into something new, there's so much that we don't know that we don't know. The learning curve at the very beginning of trading is more about to me anyway, is more about being able to manage a trading platform, to be able to pull up the charts, to be able to buy and sell, to put in stops. There's a pretty big learning curve just to get into a competency where you're just not going to keep messing up your trading platform and all of that. And I think that's where we kind of get this big boost right at the beginning, especially on sim, because the decision making is so easy and there is no consequence. We come off that sim thinking we're going to just kill it here.
Yeah. Yep. Yeah, exactly. Very, very common.
So when we come off that sim and we think, all right, this is going to be easy, and we start to sense the fact that we are putting something at risk, and this may not be as easy as we think it might be, then we end up kind of realizing, hey, you know what, there's more to know about this. And to be honest with you, I don't really know that much about this because perhaps I've been taking some losses, perhaps I'm having a difficulty even getting into the market. There's so many different fears and things that are coming into our mind at that point. And check me if I'm wrong, doctor, the good feelings about that sim, that thinking that you were going to be great at this, those feelings and emotions are nowhere near as highly charged in your brain as the doubt that starts to come in and the pain from losses that starts to come in as you find out maybe you're not God's gift to trading.
Yeah, exactly. And well, none of us are, but we all have moments, or not all, but many of us have moments where we think we are. And I have to say, it's kind of natural to have that. It's a human tendency, but we have to completely always remember to remind ourselves that, like you said, John, it's like on the slide here, kind of going out towards the expert end of that curve, people who are good, who are solid traders, who make money, who support themselves from their trading, they generally know their limitations. They might forget them here and there once in a while, which is normal. We're all humans. Nobody's robotically perfect. But in general, they're humble and they know their limitations.
Well, I know every time I have let my left down and said, I've got this now. I don't have to worry about it. I'm just going to be able to make money no matter what. It's always been followed by some kind of a drawdown.
Yes, same here. And in fact, I've mapped it out for myself. There's I call them personal indicators for myself and a lot of my clients that I've worked with also. If you think about it, you can actually identify certain behaviors or thoughts or things that you do that indicate that you might be getting at kind of at the end of that spectrum, right, where you become overconfident. Um, yeah, I mean, I'll share one of them for me. I mean, I've got a lot of them actually for me personally. But for one of them is like on an upswing in P&L, if things are going well. If I'm also continually checking, or the more often I check my P&L on an upswing, and I start thinking about the numbers, that's a bad sign for me. And so I have to constantly, when I want to go peek at my P&L, when I'm in the midst of an upswing, it's like, oh, red
Oh,
flag number one. And if I keep doing it, it's like more and more red flags. So
I was going to ask you about that. We see that a lot with traders, funded traders here at Topstep. When they have a good day or a series of good days, it's almost like, we try and alert them to the fact that there's a lot of the worst days we've seen have been directly after some of the best days we've seen. Do you think that's kind of a function of that, the overconfidence?
oh yeah, and that is almost, I don't want to say universal, but yeah, really, I see it all the time. I've seen it in my trading numerous times. I've seen it with many coaching clients I've worked with. A lot of traders have been around for a long time would probably agree with that. That often their biggest drawdowns come right after a big up period. It's
Mhm.
very, very true. Yeah.
So maybe this is a good time to kind of talk about the cognitive biases. And I see a couple of questions coming in here. Please feel free, if you have questions that are coming up or questions that you've brought with you, go ahead and start putting them in the Q&A or the chat. Either one is going to be fine, and we'll get to those shortly here. We have the doctor with us for a brief time. He's going to be back in about a month again. So, I can't tell you how much. I know everybody's probably a little tired after the trading day, but it's a good thing to have this opportunity with the doctor to turn off the trading platform, to decompress a little bit and really give some deep thought to the things that we're all trying to achieve in trading, and that is consistency and hopefully tremendous profitability. And we know it's difficult, but we're just I feel so lucky to have the doctor here. We want to make sure and make the best use of his time. So what we were just talking about, and there are a lot of cognitive biases
Mhm.
are I think, what would you say that cognitive biases are ways that we trick ourselves into thinking maybe we're better than we are?
Definitely. And there are dozens and dozens of cognitive biases. I think there's over 100 last time I checked. Yeah, it's a great catalog of things that we fall into, humans can fall into. But let me just say this. This is an important thing too. Simply being aware that these biases exist, it's a really good start. That's everyone has to start there. In other words, understand what are these biases that I can fall into? How do they operate? But I will say that just awareness of the biases, um, really, I hate to say it, but it actually doesn't do anything in terms of mitigating or preventing or helping us deal with the biases. As a matter of fact, I just finished reading, a lot of folks like this book in the trading world, and I recommend it. The Biggest Bluff, I think it's Maria Konnikova, journalist, writer who went and followed a poker player and tried to become a professional poker player for a period. Actually, she did. She kind of
Huh.
talked about what she went through during all that. And she's a psychologist. She's very experienced in psychology. And she had a really interesting line in her book. She said, for someone like me who knows all about the cognitive biases, I did my doctoral dissertation on cognitive biases, yet when I'm playing poker, I still fall into them.
I'm sure. I'm
Yeah,
sure
the
it's the
same
heat of the
thing.
moment.
Yeah, completely. Yeah.
It's that risk.
Yeah. Yep.
So I was kind of just picking these three biases
Mm-hmm.
because the overconfidence is that first big spike of, I'm going to be great at this. This is what we end up with when we're trading in sim, and the decision making is very easy. I think the human mind will kind of discount the bad things that we do, and of course, always looking at the good things that we may do in that regard, right?
Yeah. Yep.
And then I think, also the self-serving the self-serving bias also hits us at times when we think that we're God's gift to trading, right? Now, this is a lot like your 1, 2, 3, 4 decision, or your trade rating system. It's
Right.
a little different, of course, right?
Yeah. It looks familiar. Yeah. Same idea.
Mm-hmm.
Yeah, I mean, for reasoning, I call it quality of decision making in a way, kind of how I
Mm-hmm.
think of it, because we never know if we're going to be right. In fact, for me in my trading, what I've learned long ago, and this is what I try and teach people that I work with, especially at least the ones who haven't really made the turn yet, is the idea that, was it just a quality decision or not? Because if it made money, it feels like it was the right decision. And if it
Right.
lost money, it feels like it was the wrong decision. But actually, that's not true. Because you know, that was my big level I was waiting for, and I got in, but yet I took a loss. To me, that's not a wrong decision. That wasn't wrong reasoning. So I think of it as, it was actually good quality, but so I kind of think of it in terms of quality, in terms of the amount of,
The decision making, right?
yeah, the decision-making process. Yeah.
This one, I think, was more about giving us a self-serving reason why these things are occurring around us, like the right reason, good outcome. It was our skill.
Right.
We knew that was going to happen.
Right. Yeah, exactly. Yep.
Right reason, bad outcome. Well, that was just bad luck.
Yeah.
Market did that to me.
Yep. Yep. Yep.
Wrong
Exactly.
reasoning, good outcomes. Hey, maybe it was good luck, but I still feel smart.
Mm-hmm. Mm-hmm. In this matrix we have here, John, I mean, this is what most traders are caught in. They can't find their way out. I mean, they don't understand this matrix. They understand it intellectually, but when they're in the midst of it, they won't remember it.
Fear and emotion control everything.
Yeah. Yeah.
When you're a fear-based trader, that's all that matters.
Yeah. Yeah. You're kind of trading from a place of survival, and you'll do anything, including very irrational things. So yeah.
I tell people, you put your first trade on, and if it goes against you, almost everybody is going to default to I'll wait.
Yeah, right, right.
I can't take this loss, so I'm just going to wait for the market to come and make me whole again. And they'll do anything. They'll
Mm-hmm,
hold their breath, stand on their head, bang on the desk,
mm-hmm,
beat up their computer, do anything but actually admit that they're wrong and to be able to take a small loss, and they create bigger losses.
mm-hmm,
Well,
mm-hmm.
that's just a mistake or bad luck.
Right,
It wasn't anything I did.
right.
And then of course, there's well, I did something and it went my way, and I'm a genius because of it.
Mm-hmm. Or and even worse still, to add to what you just said, is they hold on to that loser. It comes back to make money, and they think
Oh,
that was they rewarded themselves, or they feel rewarded for the payoff, right?
right.
It was
And
good outcome in terms of money, but it was based on, as you mentioned in your slide, wrong reasoning, or what I would say low quality decision making. And then they've pretty much just deepened the groove, the track of low quality decision making as a path towards um, as their path of, or I should say, their way to become a trader, or to succeed in trading, or to continue on with trading. And that's it's not the groove that you want to create for yourself along the path.
no, I almost feel like I should have put your hierarchy of decision making next to this, because it's so similar but so different.
Mm-hmm.
Your hierarchy of decision making is similar. You've got process oriented decisions up here and not process oriented here. Good outcome, good process. That's a number one. You would consider that one of the best decision making,
Mm-hmm.
because it was in process and because the outcome was good.
And there's
The
a certain amount
second,
of luck involved in that too. That's why I wouldn't call it just skill, because right, because
sure, that, but
other
yeah,
trade,
this is what somebody self-serving would be kind
right,
of thinking, right?
right. But the bots, the algos, the other traders, they were caught in a squeeze or whatever, or they bought in and that lifted prices, and that's why I made money on my long. We got to remember that. Yeah.
Hmm. And then right reason, bad outcome isn't, necessarily, it's it just didn't work. Is it luck?
Right.
Maybe somewhat,
Yeah. Yep.
but then your bad decisions, a bad decision, good outcome, bad decision, bad outcome is a 3. Bad reasoning, bad outcome is a 3. The most damaging would be a outside of process good outcome would be the bad one. That's the 4th one. That's the most damaging, right?
Yeah. Super damaging. And it's so damaging, John. I mean, we've all done them multiple times, and I hate to say it, but all you have to do is just once, and that kind of sets up a dynamic that you think you can get away with it again, get paid off for wrong reasoning, or paid off for low quality decision. And most of us have had definitely more than one of those, but all it takes is one. And the more of those you have, the harder it is to make it, to be honest.
Because you reinforce bad behavior. The next time that situation arises, you remember it, you do it again, you do it again,
Yeah.
and you do it
Yeah.
again. It's like the bad child who only gets attention for being bad.
Yeah. Yeah. You know, years ago, I was a friend of mine who was a professional poker player. And I was kind of trying to learn poker. I'm not that good at it, but he was giving me some tips. And he was saying, like, one of the things he noticed with me was, I would get sometimes too aggressive or whatever. And, I would get paid off for it here and there. And he pointed out to me, he said, like, that is really bad, man, because you're not always going to get away with it. And he said, what's the reasoning behind it? And I said, well, each time I did it, I would promise myself, this is the last time I'm going to do it if I can get away with it this time. And he kind of laughed. And he said, yeah, that's what we all say. Welcome to the club. So
Linda Rashke's got a funny thing about that too. It's, you always think you're going to get away with it this time.
yeah, right. This is the
Always
last
think
time
you're
I'm
going
going
to
to
get
do
away with it
this.
this time. This
Yeah.
time is the last time, but I'll get away with it this time.
So here's the thing, everyone who's listening to us. If you find yourself saying that to yourself, that should be a humongous red flag. it should be a big red flag. Oh, this will be the last time I do that. So glad I got away with it. If I get away with it, boy, that is something you have to just, if you do that, I'm going to suggest you should be journaling a lot about that after it happens, and go back and reread that entry every day to make sure you really understand what happened.
Because the next time it comes up,
Yeah, because
I
it
got
will.
away with it last time.
It's a
Maybe I
guarantee
get
it'll
away
come
with
up
it.
again. Yeah.
Maybe I get away with it this time.
Yeah. Yeah.
All right. So, oh, no, not there yet. Okay. Doctor,
Yeah.
thank you for going through all of this with us. Perhaps we should go into more cognitive biases on the next the next session. We can
Mhm.
discuss that if you think that's a good idea. We'll get that going. But you ask a few of the questions from the folks that are here with us today, if that's okay.
Sure. Yeah.
Okay. So Esteban is saying that he can trade real money profitably even for 2 months in a row, but he can't pass step 2. Yet I'm pondering at least choosing the wrong trading combine. So
Hmm.
what Esteban is saying is he can trade real money profitable even for 2 months in a row,
Hmm.
but he's having trouble getting through the trading combine. Per-
Yeah.
Perhaps there's um sometimes when people are trading real, they don't view the trading combine as an actual real account.
There could be a few different things going on here, Esteban, and I don't really know. So I'll mention a few possibilities. And I'm not saying any one of these is the thing happening, but these are some possibilities. One possibility that I'm wondering about is when you're trading real money for 2 months successfully, were there many of those type 4, what I call type 4 decisions, low quality or poor reasoning, but you made money? Because if there were some of those, that could be a problem. Don't know. I don't know if there are. You would know. So that's one thing I would want to know about. Another consideration is this. 2 months you can trade well, and then things don't. Um, you can't kind of extend it. So there could be the possibility, or like around market context, market regime changes. Maybe your different types of markets are different. We have to trade them differently, in my opinion. So that could be also a factor there as well. And then another factor is that, um, so the combine has its risk parameters, right? There's daily stop losses, and when you finally, lose enough where you're no longer in the combine, there's certain risk parameters, and those risk parameters might be, and they're designed to obviously to protect the firm's capital, right? That's what any prop firm is going to have, risk parameters if they're backing traders, even hedge funds, anyone where you're trading someone else's capital, there's risk parameters that someone else established for you to protect capital. So the other idea here is this: are the risk parameters, do they not mesh with your strategy of trading? Perhaps, like for me, I'll just be really upfront with this. I can't trade with super tight 2 or 3 point, even 4 point stops in the ES. I'd be getting nicked and cut up constantly. So I trade, with much wider stops, much wider targets, and I've reduced my size. Would I be able to pass a combine doing that? Probably not, but it works for me in my own account. So there's a lot of other considerations. So
Yeah, that's one thing Esteban was kind of mentioning in his question was maybe he kind of chose the wrong combine. Of course, maybe there's the position sizing, and everybody has their risk appetites and what they're allowed to do in their even in their own accounts. So Esteban, if you're getting stopped out too much, you can trade micros in the trading combine. Start looking at micros and expanding that risk and seeing if your performance improves. There's
yeah,
lots of reasons.
yeah, the micro is a great instrument to use for that purpose. Exactly. Yep.
Sure, yeah, just to kind of get used to the idea that you actually have skin in the game, even though it may be
Mm-hmm.
small.
Mm-hmm. Yeah, in fact, I would go as far to say I think you probably learn more about yourself and your psychology and how to manage yourself trading micros than you would trading sim.
100%. Okay. Anthony Rojas has a question that so many people ask, and I'm looking forward to your answer to this. Anthony is so close to passing step one, so he's probably approaching the profit target in the combine, but I feel like I'm hitting a plateau or just making mistakes right near the goal. What do you suggest I do to maintain confidence in my trades to get there?
Yeah, well, there's a lot of different possibilities, Anthony. I don't know you, but so I'm just going to sort of start off sort of in a general way in that you have to remember what John and I were talking about earlier today's webinar, which is there's the variance, right? You have to remember that each trade is a mix of luck and skill. So as you're getting close and you start to, obviously, anybody can have a trade or a series of trades that don't work, but yet they might have been well-reasoned trades that just produced, negative P&L that resulted in a loss. And then you might lose confidence from that. So I'm just saying with this example that when you get to that 1.5, 2 month point again, and you reach that kind of just shy of turning the corner, you got to remind yourself that if you start experiencing some losses, but they're with well-reasoned trades, you have to I would suggest start journaling about that for yourself to reinforce the fact that you were actually making the right decision or good quality decisions, as I call them. They may not feel like they were the right decision because they resulted in the loss of money, but they were good quality decisions. That's all we can actually do in trading is just make a good quality decision and hopefully make another good quality decision after that and try and make as many as we can. And when we've had some financial losses as a result of making these quality decisions, we have to remind ourselves that the losses didn't come from our decisions. Our quality decisions were still quality decisions. The losses came from the fact that was the luck part of it, right? The variance, the fact that other traders, for whatever reason, bots, algos, for whatever reason, a news event, anything, other forces went the other way. And it made our trade result in a loss. It's no indication, no bearing. It's not a referendum on your decision-making process. So therefore, we have to remind ourselves in that situation, if you could remind yourself of that, it may help to maintain your confidence in spite of getting nicked or taking some losses as you get kind of close to that 2 month mark again.
Doctor, this is something that I've kind of done in the past that I don't do anymore, and that is to have a financial goal on a daily basis or a weekly or a monthly basis. And we understand that we have to be able to evaluate our traders through some sort of ladder, but it's been my experience in the past, if I have a 40 tick profit target on any given day and I get to 38 or 39 and I start taking losses, I start to freak out, right? I start to get a little bit upset about the fact that I wasn't happy with the 38 or 39 ticks. I had to make the 40 and things turned south from there. I've taken a lot of really good days and ruined them that way. Another thing that they kind of seems this way to me with some of the people that I've worked with in the past is you go into a defense mode. When you look at the Chicago Bears this year, they were ahead in a lot of games, and it seemed like they stopped trying to score and just tried to keep what they had. And I think that's another way that the traders, that are approaching a goal like that, reaching the trading combine, kind of freak themselves out and go into protection mode and end up maybe dying by 1,000 cuts. It's difficult to keep that same strategy going that got you there. Thoughts on that?
Yeah, very well said, John. I mean, I totally understand. I mean, perhaps, there's financial metrics that people have in order to advance, to the next level in their trading in terms of Topstep. I would just say that if, separately from that, as a trader, as each individual trader that we are, I think for our own psychology, not associated with whether we're in a combine or we're being evaluated, but just in terms of our own psychology, I think trading for a specific dollar amount or number of ticks or something like that, points, ticks, pips, whatever, is very dangerous. It's actually counterproductive in our
Agreed.
psychology. Totally. And I totally understand where it comes from. I mean, in fact, as you know, John, there's a lot of educators, a lot of folks out there. It used to be much more popular than it is now. Used to see a lot of ads for things like, we'll teach you how to make $500 a day or X amount of dollars a day. And then with the implication of like, you add all that up and you'll kind of see where you are in a year or two and you'll be fine and you can replace your job. And, and it seems to, on the surface, this, we'll teach you how to make a reasonable amount of money per day. Not too much, not too little, just a nice amount. It seems to speak to the greed factor. Oh, boy, if I just have this financial goal, then I won't get over my skis and I won't get too greedy and I'll just hit that number every day and everything will be fine. Well, as those of us who've been trading long enough to know, been around long enough to know, some days just have bigger opportunities. So you can make a lot more than that goal. Some days are much smaller opportunities. So you're going to make less than that. And some days are just not your day at all. And you're going to lose. And to say that I'm going to shoot for a number, ticks or dollars, is pretty much, it's kind of like forcing a square peg through a round hole. It really
I like
is.
that.
It's just like, and I've talked with a lot of traders over the years who have that idea implanted in their head.
Sure.
And it could either become from something they read from one of those kind of book smart traders on the internet, that there's tons of them out there that have their spreadsheets and show you the expectancies and this and that and how you.
Sure.
There's a lot of, so people get planted in their head, oh, just shoot for X amount of dollars per day and I'll be fine. I would say, please disavow yourself of that notion, because that's not how trading works. A little personal things. 2020 was actually my best year ever in terms of my short-term day trading account. And boy, it was lumpy though. It's not like I made consistent money. In fact, there was one month I was red, March. Another month I was close, I was near break even. And there were lots of days that were red days. So, but yet I had my best year ever. So go figure, right?
Well, congratulations on having a very good year for one. And you said so many things that touched me. When you have a specific money goal on a day time frame, what if the market just isn't big enough? It pushes you out of your strategy, and that's that whole square peg through a round hole that you mentioned. Some days you're just not going to be able to do it, and having that goal and striving for that goal makes you feel like you weren't successful that day. Even if you made money, even if you had a good day but didn't get there, you still have that empty hole of not being able to achieve that goal. Markets are dynamic. There's going to be days that you're going to be able to knock that goal out of the park, and days you're not going to be able to get there, even if it is a winning day.
Yeah. And that's just one of the hardest things that it took me to learn in trading, was to not take it personally, and to, if I thought I was making good quality decisions and still have a big red day, to not have that shoot my confidence, to not take that personally. That really took a long time for me to internalize. And there's still times where I still don't really internalize it that well. Gotten a lot better with it, but that took a while. That's a big job for somebody to be able to accept.
And we're talking to a doctor here who has experiences the same things we do and struggles with it.
Totally.
It's not easy.
All the same stuff. We all struggle with the exact same issues and even very similar emotions. It's pretty much, it's what we do with it. It's how we react to the struggle. Some of you listening, a few of you perhaps, maybe hopefully more, will start tracking their trades in terms of this matrix that John showed, the good outcome, bad outcome, or the type 1 through type 4 trades that I've talked about. And they start to keep track of that every day and record it. It's a great place to start. A few people will. Many people probably won't. This is part of it.
They'll stop after a while.
Yeah, they might do it for a few days or a week or two. Exactly.
Okay, Daniel Leonard has a question. Could you talk in a little more detail about watching the P&L? I assume you're saying you're watching the P&L indicates a lack of confidence in your trade. When you were talking about checking your P&L on good periods of time, it makes you a little nervous when you start looking at it.
Well, what makes me nervous is not that I'm lacking confidence because I'm looking at my P&L. It's because I'm, in a sense, I'm having that temporary confidence that I've talked about in other webinars, where I'm only feeling good and I'm elated because I'm making money. And I look at keep peeking at my P&L, which is getting fatter. And it's like, I'm getting even more stoked. This is great. To me, that is, and I think a lot of people recognize this, that is when we start to get over our skis. We start to get complacent with risk or even sloppy. We might start to oversize because this thing is going to keep on going. So to me, it's not peeking at my P&L when my trading is going well during the day. It's not a suggestion that I'm lacking confidence. It really often can mean, not always, but it often for me means that I'm probably slipping into, if not already there, kind of experiencing what I call kind of this temporary false confidence, which is just based upon recent P&L gains.
Okay, thank you, Doctor. We have Joe Barbara is asking, what do you identify when you are in one of these boxes? And I think he's speaking specifically to this, not necessarily to your hierarchy of decision. And if I can start here, it's if you feel as though your right reasoning and a good outcome means you're a genius, that's a self-serving cognitive bias.
Mm-hmm.
If you have bad reasoning for the trade and it's bad outcome, well, that's a mistake then. There's nothing really that gives you any personal responsibility when you're in a self-serving mindset. Would that be right?
Yeah, I think I followed you correctly. I think so. Yeah, I think that sounds right. I think I got it all. Yeah, the main thing is that we don't control the outcome of the trade. We only can control the decision-making process. And we often will confuse, this is, we get into this idea of resulting, right? Which is where just because we had a good outcome, we think automatically that the process that led to it was a good process. And if we had a bad outcome, we automatically think that the process that led to it was a bad process. It was a bad decision because I lost money. Totally untrue. And just because it was I made money doesn't necessarily mean it was because it was a good decision. Totally not necessarily true either. Those are really hard things to get your arms around and to stay present with all the time.
Thank you, Doctor. Scott S. has said he's overtrained his mind to look for reversals to the point where my mind rejects continuation trade setups. Any idea how to reshape my thinking?
Oh, wow. Great question. I don't get that kind of question very often. So, there's a lot of ways I can answer it. I don't know the person asking it. I don't know their background, who they are, context. But so I'll just sort of answer it in general terms from what I've seen across with a lot of people. This is actually not something that I've personally been through myself much of. I have other issues that I battle with, but a lot of people that I've worked with, common. And I think part of what happens is that if you've missed, if there's a big move underway and you feel like you've missed it, then it's natural to start looking for the counter move. The counter move can also make us feel, you said you spend a lot of time kind of training or conditioning or practicing or looking for it. And I think that can also, in some way, it makes us kind of feel smart to be able to find the turning point. It kind of fulfills the psychological need of, look at me. See, I got the turning point. Aren't I smart? Aren't I the smart one? I'm so sharp. And I think people who, I'm not saying this is the case for the person asking the question, but it's a possibility that very often this whole need to be right, when that becomes so important, or the need to feel right, the need to be, to identify something that is right, I think when that becomes so powerful, more powerful than the need to just have quality decisions, which are two different things, when that first other need, the former need, the one of just being able, just the real strong, powerful need to know that I'm making the right decision. I think that often is what motivates people to kind of get stuck in this only looking for, counter trend trades. Not to say that counter trend trades are bad. There's people that make their living on that. So you just have to understand who you are and why you do that. I also know that a lot of good traders, successful traders, that's just one aspect of how they trade, right? If it's the only aspect, then I think there might, perhaps, maybe, again, I'll underscore maybe, I don't know. There's this, this person could be, there's just a really strong element of extra strong of needing to be right. And look at me, look, I caught the turn, combined with, or maybe not combined with, but there could also be this, we wait, we missed a big move, and now let's look for the counter move kind of a thing. So there's a lot of possibilities here.
Well, if you were trying to pick the bottom early in the S&Ps today, you probably had a tough morning. But I'm with Scott here. Getting into continuation trades, getting into a trend that's already underway has always been a challenge for me, and one I continue to work towards being successful in. Oleg has a question. Hello, doctor. Can you recommend some mental exercises for patients? I think that's the overall question. Getting out of winning trades early has been my biggest problem. I find that walking away from the PC after putting on a trade works as a remedy for fidgeting around with the mouse. But at the same time, it is a mental torture, anguish not to be looking at the screen. Help, I've left a lot of money on the table because of that. Do we just get comfortable being uncomfortable, doctor?
Yeah. Well, I'll tell you what, I'll give you three techniques, three things you can do, and I'll try and get through them quickly. So one is do some mental rehearsal, get yourself in a very relaxed state, not when you're trading in the evening outside of trading hours, and imagine, rehearse with as much detail as possible, seeing yourself do what it is you want to be doing. Okay. So there's that technique. There's a lot to mental rehearsal. That's just the basics. Another technique would be, or exercise would be, to, when you're in one of these situations, to focus on your body, to relax your body through long, slow, deep breathing. Because an anxious body, when our heart rate increases, when our respiration becomes shallow or increases in rate, that physiological state, our brain will use that to create anxiety, even more anxiety than what's actually going on in the market or in your trade. So some long, slow, deep breathing will also help. And then finally, I'm going to say that, well, this other one would probably be too long to talk about, actually. We should probably save that for another one. But I'll just say that, regret is inevitable in pretty much almost every trade, including winning trades. There's a built-in dilemma. What do I do with this trade if I get out here and I only take some profit and it keeps on running without me to my profit target, and I'm not with it anymore? I'm going to really regret that. But yet, if I take it off here or if I don't take it off here and it comes back in against me, I'm going to regret that I had some profits that I didn't grab when I had them. I'm going to regret that. So right there, we have this dilemma, and that's what this person's probably talking about. And the dilemma is inevitable, okay? The regret is inevitable. So what I tell people, and this is a lot of what I do in my coaching, is that we talk a lot about how regret is experienced, what the experience of regret actually feels like, and to prepare ourselves for that, because this is what's going to happen. You're going to experience one form of regret or another. And that's the dilemma in every winning trade.
And there's always something that we feel like we could have done better.
Oh yeah, it's completely, yeah. Yep.
But we're not going to be perfect. We're not going to sell the high tick or buy the low tick. If we are, it's dumb luck.
Yeah, exactly. And it's interesting you say that, because a lot of folks who get attracted to trading, they have some perfectionistic tendencies perhaps in their personality. And then, as we know, right, that kind of personality does not lend itself well to trading. So yeah.
So I've kind of something I've done in my own trading, in my own mind. You know, if I have a specific entry, stop, and profit target for a specific trade, and not all of them are that way. It depends on market state. But if I reach a profit target and I get out and it continues to go that way, I consider that a new situation. That's a new opportunity
Mm.
because
Mhm.
the first one has played out. If it continues, there's a new opportunity after that. So maybe that's just the way I kind of placate my mind to say
Mhm.
I have to
Mhm.
be okay with that regret of
Mhm.
maybe missing out on some of that move, but it seems to work for me.
I like that. And I'm a big proponent of if it works, then do more of it. And
Mhm.
yeah, I like that.
All right. I got another question for you, and then maybe we'll be about an hour, and I don't want to take up too much of your time. We got Jake Nelson taking off Esteban's problem. I'm new to Topstep. I've had about 60% success rate and about a 1,000 to 3,000 daily on another sim, positive on another sim. But in TS Trader, I feel like my performance will be reviewed by coaches. I trade differently, and I've only had bad days, just a couple so far on TST. Any advice for tempering what is obviously subconscious to desire to prove something to others
Mm.
that could obviously create issues in the trading combine? This is a great question, Jake.
Yeah. And I call this the trading on the stage kind of a thing, which is kind of why I don't like to and ever tweet when I'm trading or what I'm doing in the market, because then I feel like I'm on stage. And I just think that people who do that are just setting themselves up. So yeah, you're trading on a stage. And I think, as you mentioned, the person asking the question, they're being evaluated by others. And there is this need to prove that you're good enough in the eyes of others, right? It's about, am I good enough? Can I prove that I'm good enough? That's a really, really big deal. It's a very big deal. In fact, I would go as far as to say, and this is where I can get more into kind of the deep rabbit hole of psycho-babblishness, in that market, if you think about it, the market is an authority figure in the sense that the market giveth and taketh away. We cannot control the market. It is the ultimate authority figure for those of us who are traders. And very often, the way we respond to the market can have some similar elements, but oftentimes very similar to how we've reacted to authority in other areas of our life that was problematic for us, or that we were struggling with, or that we were frustrated around, or we weren't getting much reinforcement around. That's a really big deal. So that there could be something around that as well. So that, yeah, the trading on a stage, being watched, is really, I think, what's happening there. It's like you needing to prove that you're good enough. And yeah, I think that's a really, other people will know whether I'm good enough or not. So I so got to be so careful to show that I'm good enough that it can really change how you trade.
Jake, I can tell you, you are good enough. And if we can't see what your natural tendencies and things that you're looking at and things that you're doing, if we can't see you in the wild, if you would, um, we can't help in the gym.
Yeah.
Don't worry about being watched. I'll tell you right now, we're not gonna watch you. Take it out of your mind. Trade your way.
Yeah. And and I think that, having someone like John or other people at Topstep to be able to give a trader feedback, right, without the trader feeling judged, right? Because the things that the trader did that they didn't like, these are things that we all do. Some of us just do them more often than others, basically. But to not feel judged around it, to not, like you said, John, to not actually have that fear of not being good enough realized. We are good enough, actually. I think most of us, the vast majority of us, actually are good enough. There's just really a very small number of us that aren't: psychopaths, sociopaths, people with extremely low IQ. For most of us, we are good enough.
Oh yeah.
It's the fear of not being good enough, which brings this idea of I need to prove myself. And anything less than good or average or perfect. Anything less than something in the positive realm is going to be tantamount to failure. It gets very black and white at that point for many people.
Think about what it was like in the trading pit when you were getting your ass handed to you in front of 600 people watching.
Yeah.
It
Yeah.
was absolutely brutal, and it's something you really had to put past you, because those 600 people are more concerned about what they're doing than you're doing.
Yeah. Exactly.
But you have
Exactly.
this feeling like everybody knows.
Yeah.
Everybody knows. So
Yeah. Yeah.
Jake, just relax and don't feel like you're being judged. Absolutely not. Believe me, I've done things in trading that uh would probably scare most of us. One last question, Doc.
Sure.
Tim's asking, is there a way to make sim trading or the trading combine more closely resemble trading real money for the for Tim? Can he
Yeah.
trick himself into taking it seriously like it is real money? And now remember, you do have a little bit of skin in the game here, Tim.
Yeah. Wait. There's no way to make it as real money, right? You know that. I've seen people do various things to try and kind of get closer to making it seem as though it's real. For example, um, getting some monopoly money, right? Go to Amazon and buy some fake money and have it sitting on your desk, right? And if you're up, there's you move the stack over here. If you're down, you move some of the bills. So you actually see some representation of the money. Okay, that's one possibility. I'm not saying it's going to work for you. Certainly not a silver bullet. But some people like it. Again, I'm a believer, and if it works for somebody, then it's good for that person. It may not be good for someone else. So that's one possibility. Um, but like as John said, even if you're trading sim, and if you're in a combine, then you do have skin in the game, right? Because you're being evaluated to get a funded account.
Mhm.
So even though it's not real money, you do have skin in the game, which is different than if you're just trading on your own private personal simulator. You have zero skin in the game, pretty much, or close to zero.
Thank you, Doctor.
Yeah.
I'm going to thank you for all of us. We really appreciate you being here with us. I look forward to this for weeks beforehand. I really enjoy talking to you and hearing your thoughts and ideas. You are, obviously a subject expert, and we all appreciate the time that you give to us. I've got us scheduled for the second week in March, or the second Wednesday in March for the next one. If it changes, we'll let everybody know. Doctor, of course, that's flexible. But I'm going to be looking forward to that one too. Doctor, we'll find another good subject, and I'm going to put the thank you. If you were looking for Dr. Menaker on Twitter, at Andrew_Menaker. His website is andrewmenaker.com. Thank you so much, Doctor. And we'll be in touch. Anything I can do for you, it's done.
Thank you, John. Well, in the next week or so, my new website will be launched. It's been working on it for a while. I have someone working on it for me. Some little kinks to iron out. When it is launched, I'll let you know.
Awesome. I can't wait to see it, Doctor. I like your website now.
Well, the new one is really cool. You'll like it even more.
Awesome. Awesome. Well, we'll look forward to seeing that, Doctor. Have a wonderful evening, everyone. Thanks for joining us. If we didn't get to your question, I'm really sorry about that. Bring it the next time. We'll try and get to it first. And that's it. Doc, thank you so much for everything.
Thank you, John. Till next time.
Have a great night, everybody. Trade well.